Good morning and welcome to Unusual Activity powered by Financial Juice. My name is George Avedon with Milton Marmonides. So we have a lot going on today. Certainly yesterday's day, big down day yesterday all across the board. So we'll review those numbers in a moment. Futures are higher this morning, so it's a risk-on trade. We are anticipating GDP in just a few seconds here. GDP is in line. We're just getting that through now. GDP is in line. So we'll also review where the futures are crude oil in response to the GDP number. We have GDP number coming through Q2 at 4.6%. Expected was 4.6%. So we'll see what the reaction is in the futures. Just slightly lower than just a minute ago at higher by 4.25. Also on the lot going on the global political level, certainly airstrikes over Syria still coming through. Talk from the UK with respect to strikes over Iraq with ISIS as well. That's coming through the wires as well. And we'll review a lot of technical analysis with respect to these levels in the markets, specifically on the S&P 500. How important are these levels that we're seeing now, and what are the levels going forward? Also, we'll review overnight markets. We'll review commodities, energy, raw materials, the rate environment certainly, and what we're seeing in pre-market trading coming into the open. We're just seeing over the wire, Bill Gross joins Janus Capital, so that should be an interesting dynamic. Again, Bill Gross joins Janus Capital. Again, we'll introduce as we see news coming through. We'll just pepper that through our presentation. So just to recap of the markets yesterday, Dow Jones down 1.54%. S&P 500 finishing at 1965.99, down 1.62%. Nasdaq down 1.94%. We did see after the economic numbers at 8:30 yesterday, we did see the futures began to come in yesterday precipitously and into the close, and we did see weakness through the trading day. And what's really important is the S&Ps did finish the day at the lowest prices of the day. And we'll get into that in just a moment, how important that is to see major indices finishing at the low of the day. Milt, what's your thought on that? How important is it to see that towards the end of the trading day when we saw that yesterday?
Well, the action yesterday, you saw clear selling across the board in every area, every sector. Usually when you have trading like that and the closing bell comes closer and closer, we have people usually trying to cover some shorts or, going long, hoping for the bounce in the morning. Yesterday we saw none of that. There was no bounce. They tried to stabilize the market during the afternoon, but clearly it was not going to be had. Started selling off by the close after hours. Had a couple pops here and there, but nothing consistent. Market clearly right now is having a small bounce. The ES handles are up 4. The GDP number came out exactly in line, so it's not neither bullish or bearish. It's just, there for that. There's not really going to be much action on that. It's going to be an interesting day. We'll go over our levels later in the program. Just wanted to keep in mind that the levels that we gave yesterday were broken, and we saw the volatility once those levels were broken. Other than that, it's going to be one of those days where, people are just going to sit back and see what's going to happen. You can't really get a feel. The GDP didn't really give anything other than, in line, no feel, no nothing. So it's going to be an interesting day. And just be careful and, you can't really decide on what to do right here, but it's going to be one of those days where you may get that volatility as of yesterday. George?
Yeah, no, thanks, Milt. So what we'd like to do is continue where we're seeing the markets today. Let's do a quick run through. Asia, Nikkei was down 0.88%. Hang Seng was down 0.38%. Certainly, we saw the carry through. I'm sorry, the carry over of the markets into Asia. In Europe, currently, the FTSE up 0.17%. The CAC in Paris is up 0.7%, and the DAX, again, let's call it flat, up 0.06. So as we move into where we are on take a look at the commodities, 10-year, and so forth. So crude oil up 66 cents at 93.20. We have some of the distillates. Let's see, gasoline up down 0.0105 at 2.7075. Heating oil up 0.0165 at 2.7123. We have the 10-year at 2.501. So again, we're really maintaining that level in the 10-year. Again, even with these GDP numbers, even with conversation of slowing down of economies globally, we've talked about in the last several days. We're still seeing this 10-year at these levels, which I find absolutely fascinating. So let's get into some of the outside of GDP numbers, and we'll have a quick recap of Lockhart's speech yesterday. We are anticipating Michigan sentiment, consumer sentiment at 9:55. We see Baltic Dry Index up 1.1% to 1,049. Again, this is a good index to keep an eye on to see how what raw materials, the quantity of raw materials shipped via the sea. So I think that's really interesting. In review of Lockhart's speech yesterday, he calls for a moderate growth of 3% on an annual basis. So he's looking for a closing of the inflation and the employment gaps. Economic readings in the future will dictate decision to raise rates. We are consistently seeing that across the board with speeches from various Fed governors, various economists, various pundits on this thought process of when the Fed will begin to raise rates, right? So he's seeing full employment by 2016 to 2017. Again, this concern of the low rates might be a risk of feeding the risk of financial instability. We saw that a few days ago with other Fed governors, well, actually specifically from Yellen's speech with respect to the considerable time and the complacency. Perhaps we saw a little bit of that concern play out in the marketplace yesterday. What's your thought about that, Milt? I think, is the market beginning to, see the possibility of that complacency play out?
Well, of course, George. It's been going on for the past, 3-4 years. The market has been rising since that 666 number in the S&P straight up. We have not had 10% correction in, I can't even imagine how many months, let alone years. So, the complacency is clearly there. Everyone is, on the quote-unquote drug of the Fed because they just want more and more and more. It's something where it's a little scary, yet it's what the market is nowadays. So for now, at least until that ends, expect to see large complacency in this market. The market dips. You have everyone saying, buy the dips, buy the dips. Buy, buy, buy. Everyone on CNBC is a bull. Everybody who was a bear turned bull. The bear camp is, from what I'm hearing, number-wise, less than 15% now are bearish in this market. So, everything is, falling into place. Everyone's popping the champagne, keeping it going higher and higher and higher until the party ends, and then, the real fun begins. But as of now, the complacency is there. The mindset is buy the dips, buy the dips. We haven't, like I said, we have not had one 10% correction in years. So that's the mindset going forward. You keep it where it is, and you just keep playing the game, and until that party ends, everyone's going to be saying the same three things: buy, buy, buy.
Point taken, Milton. One of the things that so we're always keep an eye on what the Fed governors are speaking, because eventually the thought process is it will carry through to what the decision by the overall FOMC is. So again, it's important. These speakers are listened to by pundits, by chief economists of larger organizations. So that's why it's really important to listen and read the speeches to and listen to what these folks are saying. So one of the things we'd like to get into before the technical analysis, we'd like to just get into some of the unique news that are coming through the wires. First, of the top insider purchases. Again, we like to review these constantly because, again, it's just an indication of what's happening to the particular stock and what their insiders are thinking. So if we take a look at fund um, FUND. We have a VP purchasing 27,000 shares. Funds average daily volume is 23,000 shares. So again, that's very interesting to see. We'll see how that carries through. Not a clearly not a huge volume stock, but a really important note there. VMEM, we see two directors purchasing a total of 125,000 shares. VM average daily volume is just under 1 million shares. So again, we'll see how that plays out. CRDS. CRDS, we have a director purchasing 30,000 shares. Average daily volume in the stock is 123,000. So again, what we like to see is will there be a carry through in these particular securities as we see these, especially directors. Remember, they're not the CEOs. They're not CEOs or CMOs. They make less money than the higher level executives. So for them to be purchasing, with their own money, those shares, I think it's really important to note. Okay, SIGA, SIGA. Where are we here? 204,000 shares purchased at $1.34. Average daily volume is 604,000. So again, we saw in this we see not much activity yesterday. A little bit higher yesterday. We'll see what the stock does today. So let's move on to some of the more unique news here. A few coal stocks being cut at UBS. We'll run through that. Again, we've seen this conversation of commodities and the prices of commodities coming down. We see just getting away from gold just for a moment. We see oil in this range. We've seen that economic indicators globally. We see always been saying this, that the Chinese are comfortable with a lower growth rate, excuse me. So again, maybe this is part of this whole theme of where analysts are seeing these commodities and stocks based on commodities into the future. So we can take a look at A&R. Let's see, it's currently at $2.45. BTU, $12.25. ACI, WLT, CLD. So let's take a peek at these stocks here. ACI at $2.20. WLT at $2.15, and finally CLD at $12.33. Uh, One of the things that's interesting is how this will play out into certainly into the marketplace, and will we see any carry through, any carryover into other commodity plays? Um, Milt, topic of conversation here is, is this, we usually see, not just one analyst downgrade certain, a group of stocks. We sometimes see a carryover, right? I mean, it's not just a one-time event that we sometimes see. Correct?
Yeah, you're 100% correct. You have, you definitely see it, and it's usually related to sectors, not, individual names, unless it's like an earnings release or a biotech with a large, bio approval or denial that all the analysts jump on board. But you clearly see it. We had coal has clearly been in the doghouse lately. Goldman Sachs came out on coal the other day as well, downgraded the whole sector. Then you have the comments today from a couple of other firms. It's a interesting feel when you have a combined view across the board negative on a specific sector. So it's something to keep an eye on. Many believe that sometimes they're late to the game when it's a across the board cut. If it's from one to another within a week or 2 week period. So it's something to keep a close eye on regarding that sector today. We clearly be watching to see what the ramifications would be on that cut across the board. But like I said, it's always a chain reaction, and it's always something to keep an eye on, especially when it's a sector that has been decimated to this extreme that people coming out near the bottom, where prices are, from what I'm hearing, option level prices on these companies that have been performing at, 30, 40, $50 levels in the past 2, 3 years. So it's an interesting view. It's an interesting sector cut. So it's something to keep an eye on throughout the day and see what the results will be.
Great point, Milt. And just as an aside, what we have on the screen here is, so what we'll show you is what we're looking at specifically in what, topic of conversation. Occasionally you'll see some, live editing there. And also on the right-hand side, you'll see three charts. You'll see a 1 minute chart, a 5 minute chart, and a daily chart. So at the very least, that'll give you an indication of, what traders look at on a intraday to day, more longer term perspective. And I think that's a great thing to keep in mind is just structure, how you structure your trading is, you want to have the right charts up. And perhaps next week sometime we'll have a bit of a discussion on what, perhaps how to have a good layout and what you're looking at to help you digest all this news that's coming through, all the information that's coming through, and properly structure your screen, or at least help you properly structure your screen. One of the things that, let's run through some of the on the upside news in the markets. Let's see what we have here. We have SSI up 19% on earnings, currently at $1.45. Certainly closed near $1.20 yesterday. RPRX we have at $9.84, up 11%. High this morning of $10.49. They did receive FDA approval. LITB 10% on earnings, currently trading at $6.25. Nike certainly beat earnings, up 8% in pre-market. Again, when you have these larger firms, certainly it does tend to lift markets. One of the things to keep in mind is, and this is we'll touch on this. When you have great earnings, but at the same time you have a possibility, you're testing some support levels in markets. Milt, how does a trader position oneself? So you have great earnings coming into the market, but then again, you had a really negative day yesterday. How does a trader look at these positive earnings at the same time into a possible, a little bit of a weakness in the market?
It's always a when in regards to an earnings coming out on strength and the markets are negative and you see the continued strength in that stock, it's my opinion, it's a net positive. For a company, in any company that goes against the grain of an overall market collapse, as yesterday when the market was down 250, you had stocks up, it's a positive sign. Because it's people tending to take money out of their weak names and going into the stronger names. Nike, Micron today had some positive news, earnings, so you can see a lot of money going into that name, especially if the market gets weak. They're going to pile onto the strong names. It's something to watch. It's never and doesn't always work. You'll see something that if the activity early in the morning shows that the strength will be there and the volume is going to the upside, it could be a safe haven for the place for the day today. But it all comes down to what people want. When we don't have a crystal ball here. So it's if they wanted to prop it up, they'll prop it up. If they believe the company was that good or the conference call went smoothly without any hitches, and it could continue, going higher throughout the day, especially if the market becomes weak. They want to go into the strong names. Strong names are going to be, some of the RPRX had the bio thing today. You had Nike, you had Micron. Now this Janus news, is up. Clearly on the Bill Gross information. Opinions why? We're making some phone calls across, desks and getting ideas across the desk. Many do not know why it's up so much on the Bill Gross news. So that'll be interesting to see the action on that one. Symbol JNS. We'll see what the rest of the day brings. But as of now, clearly they're going to be popping into the strong names and, selling some of their losers. Especially at the end of the month, we got, I believe it's quarter ending. So it's going to be interesting the next few days, I'll tell you that much.
Milt, I think you bring up a great point here. We are coming into the month end, quarter end. There is that end of quarter, end of month rotation, right? You want to take a look at the positions you have. You want to take a look at the positions that have been working for you, and those that have not been working for you. It's time to reconsider those, right? I mean, it's normal in this particular cycle. So just to continue here, AIXG, Milton mentioned that Micron certainly positive in the morning, up 7%, currently at 34.18. AIXG, analyst comments up 6%, currently at $15.18. AGIO, again, biotechs are just, a favorite to trade among active traders and investors. Currently at 57.21. Yesterday, looks like it finished right around that 53.76 level, perhaps. So again, should be very interesting. If we take a look at AGIO, average daily volume is 393,000 shares. So we'll see if that has an impact on just not just price volatility, but also in volume as well. Gale update on a special committee update, up 4%. GALY currently at $2.34, and DMND we have a 3% higher 3% in pre-market based on earnings at $28.24. On the downside, and we have ACRX update on Zalvizo down at $5.60. If we take a look at the average daily volume on this ACRX, bear with us one moment. ACRX average daily volume is just a little bit over 1 million shares. So again, we'll see how that translates into activity today. We did see if you take a look on your volume, we don't have it here. We'll have that If you towards the end of the day at around 3:45, 3:50, there was a very large volume spike just around the 3 o'clock hour. Actually, no, towards the close, excuse me. So that, again, very interesting on that. So we'll keep an eye on that. FINL down 10% on earnings, currently at $26.73. Again, we always talk about volume, but it's important. It's important when you're holding a position, whether you can sufficiently get out of this, what other participants are in that particular security. BOTA, through that, we're down 5% based on earnings, currently at $2.33. Certainly, BlackBerry BBRY down 4% on earnings at $9.64. BlackBerry has always been in play. It's always being monitored by traders and active investors. So I think that's just the volatility will just still continue on that. And in PULS, we have down 3% voluntary delisting from the NYSE, currently at $2. What we'd like to get into is some of the technical analysis that, yesterday was a really big day. We see the S&P futures now up by 1 at 1962.50. Clearly, 1960 is a support level, right? We constantly monitoring that. What's your take on that? We saw futures higher, earlier today at, what was it, higher by 4.5 at the GDP number. We're seeing this precipitous decline in the futures. What do we look at the technical analysis here?
Well, let's just go over what we went over yesterday. Like we said yesterday, we gave everyone a range between 1980 to 1990 on the ES futures. As we can see, yesterday morning, the highs basically hit that 1990 level, which was resistance. Did not break it, broke down, broke the 1980 level, and just completely sold off. So clearly the range was broken with the support on the downside, and we saw massive selling coming right off that break. Today we're looking at a level of about 1960s on the SPX. Ideally, if we continue looking at the ES, we have large support at 1950, 1955. If that level is broken, we could easily trend down to the 1940 levels, 1938, 1940, which is support. We will be watching those levels very tightly today, because if you see continued weakness throughout the day, those levels could be tested. Like we'll note it again on the downside on the ES. We're looking at 1950-55 support on the SPX, a 1960 support level. Resistance is currently at all whole numbers. As of now, it's between 1970, 1968, 70 on the ES futures. We're anticipating, a interesting day. As you can see, within the past 15 minutes, the ES futures topped at 1967.25, and currently we're trading at 1961.75. Word is going around of a very cautious feel regarding this Bill Gross going from leaving PIMCO to Janus Capital. So, a lot of people are thinking to themselves, what's going to happen? Are they going to have to rebalance their portfolios? How is Alliance going to do overseas? They own part of that, of PIMCO. So, we're getting weakness overseas. We're going to get weakness in the bond markets. We're going to see some shifting here and there. They're going to be trying to find out who's going to be the the new guy the new head in charge there. So it's going to be a lot of what ifs, what's going to happen, who's what. So you expect some volatility off of that news. But like I said, currently we're looking at the ES futures, at support around 1950 levels. Watch that level. It's pretty heavy support, but nothing as extreme as that 1980 number, which was broken yesterday. And looking at resistance around 1970s. One thing to look at that I wanted to mention also as well, we discussed earlier, is the VIX. The VIX currently is trading at 1564. Um, the numbers to watch are between 1650 and 17 on the VIX. We had a quick one about 7-8 day range when it was traded back in beginning of August in that 17 range in the VIX. Clearly built some resistance levels at that point. We're looking at that level as clear resistance. Yesterday we hit a high, excuse me, of about 1670, which popped right at that resistance level, bounced right off it close to about 1564. So we're going to keep a close eye on that level around 1650, 17 on the VIX. If that breaks, we can see a nice pop probably to the 20s, next level of resistance, which is not even a strong level of resistance. So we're looking at the 20s to the upside, and if we can contain it from breaking that 1650, 17 level on the VIX, easily can go back to the 14s, maybe even the 12s, which is the support, large support across the board. So keep a close eye on that. That usually dictates markets as well. Keep an eye on the ES, levels that we put out there, and be careful. It's one of those days where not many are going to be around today. The weakness is starting to set in pre-market before the market opens. We've got about 29 minutes till the market opens, and the trend is to the downside as of now. Futures, while we've been talking, have turned negative. Now we're down 150 on the futures on the ES. So watch the levels. Watch the support is right here, and good luck on your trading today.
Thanks, Milt. So one of the things that Milt brought up was I think is really important is understanding that certainly we're at levels here where a 200-day in the market is not uncommon, right? And so we're expecting this type of volatility. Again, watching these key support levels, resistance levels, watching the VIX here. Again, mentioned between the 1650 to 17 as a top with intense sell-offs here. So as we're taking a look at the markets, just one more futures here down 1.75. We do see some movement in the 10-year at 2.542. There's some just conversation circulating around some desks there that the portfolio, Bill Gross's portfolio could be readjusted. So I think we're seeing some movement there in the 10-year. Taking a look at the markets overseas in Europe, we see the FTSE up 0.13%. The CAC in Paris at up 0.73. The DAX is, again, call it flat, down 0.06%. Let's take a look at Janus. We did see a little bit of movement. We see currently at $15.50. And so we'll continue to monitor that. One of the things to keep an eye on is certainly the consumer sentiment, continued conversation about the economy at 9:55. We'll see how that brings up. And so let's see. We'll take a look at TNX here. Sorry, one moment. Let's take a look at also at crude oil. Take a look here. See how that's responding. One of the things that we wanted to bring up in crude oil is this conversation of if the price of crude oil stays where it is within its range of between the 91 to 95 range. What impact does that have globally? There's various countries around the world that certainly are producing oil. What does that mean for them? Um, so I think with crude oil being in this range, I think is imperative. Um, as a global view, what impact does this price have on Russia? What impact does this price have on Iran excuse me, Venezuela and various other Middle East countries? So I think that's really important to know. I think that uh, brings into conversation what's happening with Russia with respect to Ukraine. Certainly, we're always monitoring that. It's always in the top of mind on traders is certainly the Ukraine situation. We saw various conversation and protest even earlier in Russia. There's, what will Putin do with respect to? We certainly see with oil being at this level, um, it's putting pressure on Putin with respect to what he will do in the future. Will this turn into perhaps a little bit more of a dialogue with respect to Russia, Ukraine, Europe, and everything that's happening with the Middle East, and also with crude oil, at these levels? What impact does that have on um, Iran and in their position in global politics? Certainly, with crude oil being lower, we are seeing, as we discussed before, other commodities um, uh, beginning to be a little bit of under pressure. We saw the UBS downgrade. So again, we're monitoring this. One of the most interesting things that we saw yesterday was in the gold. Gold did spike up, move up a bit yesterday based on the terrorist conversations that were going, terrorist threats or potential terrorist threats on U.S. and Parisian subway systems. It wasn't confirmed. There was a little basis behind that, but certainly um, uh, gold did see a price increase yesterday, and I think one thing to keep in mind is how how traders in general respond to terrorist threats. So the fact that there's continued airstrikes, continued conversation from the UK with respect to ISIS, I think even just the thought of potential terrorist strikes are heightened. So one of the things that I'd like to bring up as we're coming into the end of our show is how does a trader position itself themselves in this particular environment? If you can, how does we have so many things going on, right? We have global politics, slowdown in possible slowdown in economics. We see slower growth in China. We keep on saying this in the European community. We're seeing commodity prices coming. We're seeing range bound in the crude oil, right? We have strikes, uh, airstrikes over Syria, and we have this potential rumors of terror, right? So how does a trader position oneself um, uh, in this particular environment? What are your thoughts around that?
Well, with everything you just noted, clearly the first thing comes to mind is caution. You have to be careful, especially with a market that is clearly, um, you know, the complacency is to the upside. Many people are not ready for a down move. They all expect, oh, it's gonna pop from here. It's gonna go back up. It's the common sense is buying the dip across the board, and it's been working for the past 2 3 years. Right now, you have a lot going on. You have a market near all-time highs. You have like we mentioned earlier, the bear percentage is lower than about 15% of the market. So it's a time where you sit back and you take caution. You evaluate evaluate your positions. You make sure that there is some sort of a a stop in place just in case things get out of control, or just in case things just continue on the downside. It's always a good thing to, which we always mention, to do your due diligence on each position you own, see where your outs are, and if you feel uncomfortable, either take a step back, maybe put on a hedge against a portfolio. But the key thing is we have to, in this type of environment, you have to be careful. You have to know when to go, big, and when to, take a step back and evaluate, everything, and like you said, there's so much going on, and we really do not know what could the outcomes could possibly be. So, if anything, if we can mention anything, it's always, be ready for, a down move, or be ready for it to go back up. You really do not know. But always be cautious. You know, take a step back, evaluate, your positions, evaluate the market, evaluate all the news going around regarding China, overseas, Europe, and even in the US. Within the next, I believe, week or two, earnings season starts. So that's another thing to keep a close eye on. How is that going to affect individual names and the market? And we really do not know what the future holds. We don't know what could happen tomorrow. This market right now has a mindset of day to day. The beginning of the week we got hit down 100 plus points. The following day we were up 150. Yesterday we were down 250. Today, futures are right now, the S&P futures are two handles down, and it's something where you want to make sure that you're ready just in case these they want to bring it down a little bit more. And caution is key. You have to be ready for believe in what you're in, believe in your trades, and if you feel uncomfortable, you can always put on a hedge. And like we always say, tomorrow's a new day. If you feel you can cover it. It's not something where you're held to it. You can trade it, and you can sell it or cover it or whatever you want to do just to the following day. So just be careful.
Good point, Mel. One of the things I want to bring up yesterday, we in the afternoon, as Apple was seeing its decline. A really important note, and a lot of people really didn't discuss this, and we want to make sure we bring it up. There was, certainly everyone's aware that there's, Apple software issues, the upgrade issues, the bend gate, if you will, but the true inflection on the stock price yesterday, Milt, was really what? It was insider selling, right?
Yeah.
And nobody really talked about this. So let's, and it's so important to do your homework to really understand why a stock price was down. So it really was insider trading, right? And that really impacted the stock.
Georgia, when it comes down to it, Apple is it's a story that really no one understands. It's one of the largest companies. Its cash hold is tremendous, but every little thing, affects it. And many people do not want to look at the negatives when it comes to Apple. You have, what a lot of people did not even mention was the fact that insiders have been selling the stock the past few weeks, and not a small amount. From what we're looking and seeing, it's hundreds of millions of dollars worth of stock. And many people did not. I don't think I've heard one mention of that besides reading it, by doing our own research, our own due diligence, and reading it throughout, filings and anything on that side. But clearly no one mentions it. Clearly the stock has been facing some pressures ever since they unveiled their products. So it's something where you have to keep an eye on. It's nothing to sneeze at. Many people mention selling is it's done by everybody. They're doing it through plans, and they do it for tax or this or that. But it's always interesting to see if a large number of shares have been sold by upper management, which have been done in the past few weeks. So always, like we always say, do your work. Especially if you're invested, for a long term in a specific name, do as much work as possible. Look and try to find information that many people do not see or even look at. Then you base your trades or your investments off that type of information. Short term, you may get some blips here and there, just like in Apple, traded from 103 74 highs of the day, when they started launching their products to right now, 97.87 closed yesterday and trading at 98.66 this morning. It's something you always should, study on and read on, especially if it's something where you're looking at an investment for, a certain time period. You want to make sure you're doing the right thing. You want to make sure you're in the position for the long haul. And if you feel a little, if you're starting to read a few negative things on it, but you still want to remain long, buy a put, buy some protection, short term, just in case, from what you're reading, you don't want to sell your position, but you want to make sure that, you don't take that. You can actually profit on the downside while holding your long position. So, like we always say, do your due diligence when it comes to investing or trading this market. It's very difficult. The littlest things can move it up or down, dollars, percents, and it's sometimes things that people don't even know or even talk about. So do your due diligence, guys.
Absolutely, that's a great point. And remember, Apple is 3.2% of the S&P 500, right? So that is a big number. So very actively traded security. You really want to keep an eye on that. So as we're coming into the finish line here before the open, as we're finishing up our end here, we take a look at S&P 500 right below that 1960 level, as we mentioned before. Remember, if it goes below that, we're watching the 1950 to 1955. So again, keep an eye out. I think, why do we bring up technical analysis? Because it's not just the individual traders. It's not just small to medium-sized desks. Everyone watches technical analysis. These larger levels are understood by desks all over the globe. I mean, I don't want to say it's just true. Everyone functions on technical analysis. They build their models based on, initially technical analysis and volume and so forth. So one of the things that I look for as we're coming into the closes, when you do have, downdrafts in a particular market, where's the volume? We've been talking about volume the last couple of days. This is in the middle of Jewish holidays, right? So we are seeing a decrease in volume. So if perhaps if a fund or a group of traders want to make a little bit of a quote unquote bigger splash, you'll see that exacerbated a little bit more in this particular type of environment when we see a lower volume type environment. Just very quickly, we are seeing just something come through on OPK. We're seeing a CEO purchase of 10,000 shares at $8.51. So again, OPK, Ocean Peter Cathy, CEO purchases 10,000 shares at $8.51. So we'll see how that plays out. Again, watching. We're watching gold. We mentioned gold with in response to quote unquote the terror trade, if you will. Crude oil is still in a range. The impact that it has on individual countries globally, certainly Russia, Iran, Venezuela. Watching that VIX as we see the deterioration in the futures. So I think all those important levels. So as we head into the weekend, certainly should prove to be an interesting weekend. Certainly, one of the larger headlines is PIMCO's gross to join Janus Capital. He will leave PIMCO. So again, we'll see how that all plays out. Specifically, how that plays out in the fixed income market. Right, we have the 10-year yield at 2.528. Let's call it. We thank you for joining us. It's been a great week, and we hope to bring you guests next week. A lot of activity, lots of economic news next week. Our plan is to introduce industry insiders next week, and we're looking forward to it. We thank you for joining us. This is George Avedon.
And Milton
You've
Marmonatis.
been listening to Unusual Activity, powered by Financial Jews. Thank you for joining us.